Fantastic.
Welcome to the morning update of how everything's going. No, hey, how's it going, Garrett?
Wonderful. Good to see you, buddy.
Appreciate
How is everything going?
You know, I'm actually very excited for the movement of all players in the industry. It doesn't matter if it's real estate or mortgage. There's a lot of things to be excited about, I think.
Absolutely. It seems to be a new day, maybe a new year, maybe a new 4 years, not really sure. But the market certainly appears to be changing. Appears there will be some changes ahead. What do you see happening real estate, mortgage-wise, for the consuming public as well as for the industry?
Okay. First, I'm going to get to that.
Yes.
I promise.
Please do.
But I need to make sure everybody understands this. Rates are going to be higher for longer. All right? I'm sick and tired of saying that they're going to drop over the past 3 years, and what have they done? Exactly the opposite. So now I'm doing a little bit of reverse psychology to make it so that the rates actually come down.
Yeah, fake it till you make it. I thought that was what it was, but it appears to no longer be working.
So even though rates higher for longer, I really don't even care.
Why?
Because rates are going to be the smallest part that impact an actual consumer in making these financial decisions. Because I have people telling me every single day, what are the rates? I'm like, oh, they're higher for longer. Well, I don't want to do anything. Okay, well, tell me about your other financial life. What do you got going on?
Yeah.
Do you got any consumer debt? You got any credit cards?
Usually yes.
Okay, usually yes. All right. How much interest are you paying on that Amex rate?
Wait a minute, it's higher. I will say it is higher. You're right.
Okay. So is it really all about interest rates? Because if it was, you should be calling me last year.
Amen to that. Yeah, it would seem that it is not.
Okay. Now, I should concede that it is a little part about interest rates,
rate
what the
does
new
matter.
payment and all this. I just think all of that was a little bit show to say that there should be less importance on what interest rates are actually present in the market and available now, and more interesting as what can be done to actually improve your financial situation using your mortgage as a tool.
Amen.
Right.
Yeah, the conversation gets very narrow when you focus on interest rate only, but gosh, if you can figure out how to make adjustments and improvements overall in your financial life, that seems to me to be much more broad and much more significant. Yeah?
I agree. In fact, I just wanted to say, look, a little thank you for bringing me in the industry. It was in 2016.
Yeah.
I appreciate that. For those that don't know,
great.
This is the guy, the man, the myth, the legend. I don't know what camera I'm looking at right now, but this is the guy.
Yeah.
He brought me in the industry in 2016. It seemed like a little bit of a sweet time. I got a good taste right before the election that happened in 2016. And then, boom, there was a big change in interest rates, and that kind of was a swift kick in the rear.
Yeah.
That maybe it's not all about interest rates and what else can be done to help consumers making the biggest financial decision in their life, whether that's a purchase on a couple $100,000, little asset, or trying to make and leverage their home and their equity as a tool for them to improve their life.
Yeah.
That was awesome. So, no, thank you very much for bringing me
It's been
inside.
great. Yeah.
It was cool.
It's been fun, yeah. We've helped a lot of people, to be honest. Like, that's really what's been great, is to think of the thousands of people we've been able to interact with, to help, to lower their overall payments, to help them get into the house they wanted in a way that works for them. I mean, it's really been very rewarding.
What I think is most rewarding is this cool little setup that I got involved in mortgages was, the model that Garrett had introduced me to was with his friends at low VA rates, but they've been doing business together under other, organizations. And it was nationwide, basically. I mean, there was only a couple of states they weren't doing mortgages in. And so I got some exposure into how they do mortgages in Florida, in North Carolina, in Kansas for a little bit of time with some of the peeps that I know back there. So I just got to see, how much of the same it is, but how different it can be with certain things related to a mortgage, such as, title and escrow, and what all is included, and some ins and outs of different parts of the country. So that was really neat. And then you also get to hone your craft by talking to as many people. It was a lot of moving parts. It was a lot of leads and numbers, and people coming in, people coming out. How can I best approach the situation for that person? And it really gave me a good experience. And some loan originators, they might be talking to one or two people a week based on their referral business, and I'm talking to hundreds of people a day, so it really was like, again, a swift kick in the rear, like how can I best help this person? I think that was just great.
And you've done such a good job at that, honestly. I think you've been able to engage with the customers, clearly communicate, identify what it is their needs, goals, and objectives are, and maybe some things they hadn't thought of, and then to bring value to help provide a real solution for them. You've done such a good job at that.
Well, with good leadership.
A lot of experience too. Mm-hmm.
So, I mean, as far as where we're at today, a market update, if you will, is that, some of the things that I saw specifically over this weekend was a little concerning because if we bring the current events into the situation where you have a new administration taking place, you have some hardball tactics that were happening when markets were closed, and so there was a lot of speculation as to how this could affect markets, specifically tariff talk.
Mm-hmm.
So you saw some futures that were just all the way down, I think at some point 600 points down, and then when the markets open, there was some good news along the way that it was a nothing burger.
So you're saying that these policies, economic, realities impact interest rates, real estate, home purchases, and people's opportunities to save money with mortgages.
Well, yeah. I mean, so they do and they can, for sure. Not to gloss over that. I mean, there are real effects and implications that happen in the marketplace based on certain political factors or monetary factors of what's going on in terms of inflation and all that. But, really the point what I was getting at is that, in terms of the market update right now is that everybody's kind of expecting and waiting and thinking that rates are going to go down, are going to go down, and like, okay, that's where I'm going to actually save money. I'm going to be smart this time around.
I'm going to do it then.
I'm going to do it then instead of now. Complete disregard how much interest they're paying now on some of these other debts. But
and 2 years from now, what do you? I mean, 2 years ago we were basically
So we're like, it's coming down.
So there does come a time, and when you look at the wasted time over the past while waiting, it seems to me to.
Lost opportunity.
Yeah,
but I mean, so what I'm trying to say is that it's just hard for us to even predict what our rate's going to be doing over the next little while because long term is something that mortgage interest rates correlate to. Specifically, I like to look at the 10-year Treasury. There's some of that right there that is not going down, and so that really has a large effect on where mortgage interest rates are going. And one of the reasons I don't think it's really fallen is that the market isn't accustomed to what some of these policies that the Trump administration is about to implement. They're not very sure how that's going to handle, how inflation's going to respond. And so there's some of this kind of sitting on the fence even for mortgage interest rates and specifically the 10-year. All that to say, I mean, that's just a little bit different of a conversation based on what we're saying right now is that it really may not even matter what interest rates are on a mortgage as long as it makes financial sense that you can actually improve yourself or your financial situation.
Yeah. So you're saying that there are ways that you can help me, even if rates are high right now, to save money in some way?
Duh.
Possibly. Yes. Okay.
The answer is yes.
Yes.
It's very true. Yes.
Okay. What are some of the ways? Like how?
Okay.
Or is that an individual specific?
Yeah, the best way I can respond to that is by giving you an example of somebody I just was talking to yesterday.
Okay.
And this specific example that we have is that this individual had called me and is also concerned about interest rates. And the first question is, when are rates coming down? And I said, well, that's a little bit of a hot topic. I like to say now rates are higher for longer. Anyway, now that out of the way, let's talk about the other interest rates or the things that you're wanting to do. Like, why are you even considering changing your mortgage around? In this case, it was a refinance to try to pull equity out. So this customer had listed out all of the debts. The debts totaling per month, the payment-wise, was about $1,500 that they wanted to get rid of.
So they had other debt with $1,500 payment. Okay.
$1,500 payment. I mean, cumulative, right? I mean, it was all together. The actual savings that this person had, if we consider what that new mortgage interest rate would be, where that would lead the new mortgage payment to, they're walking out of there with $800 a month savings by
Wow.
paying off all of this other debt.
So you're freeing up $800 now. If you take some equity out, even with a higher rate, pay it off. Now you're freeing up $800. I guess the concern would be, well, gosh, now I got this mortgage, right? Like, well, how do you deal with that?
Yeah, so it's it's something easy we can do on the cash out refinance, that type of thing. And these people, they were less concerned about what the rate was and more concerned about how much money they were spending each month because they're on fixed income. This isn't something that they can just change or go, go do something about
They're
it.
trapped at this
They're
point,
trapped
but
at this
yeah,
point.
yeah, that makes
Not to
sense.
mention all the other higher costs about food and
Yeah,
all of this other
everything's-
things,
yeah,
right? I mean,
yeah.
there's something's got to give at
Yeah,
some point.
yeah.
Not to mention something lesser well known is the dang property taxes. As the values increase, property taxes also have a tendency to increase, which
true.
also can hurt people that are on fixed
Yeah.
income. So, I mean, all that to say, there's still definitely an opportunity, to help at least with new mortgages, but also on the other side of things of purchases. People are still moving, and,
Yeah, that's-
and
yeah.
so what I'd like to do and introduce over the next little while is bringing some of the people that I know of here in my local market.
Yeah.
I want to actually get them involved in this and share some of their experiences and stories about what they're seeing in the marketplace.
Awesome. Amazing. That sounds awesome. The interest rate environment, what are you projecting in the short term then for interest rates? Do you think that they'll just remain where they're at? You said they're going up.
I mean, there's a little bit of reverse psychology. I say they're going up higher for longer, so hopefully then they'll come down. That's nothing that I can really predict, and every time I do, I look like an idiot. The best thing I can focus on is the current situation for that person that I'm talking to. If I had to guess, I would say the days of the 2% and 3% interest rates are not coming back anytime soon.
Yep.
If anything, I think leveling off in the market rates might end up being somewhere between the 4% and 5%, which is still historically
Very
low.
low.
And then also there's an opportunity there because there's a handful of people that are at the 7 or at the 8 or at the 6 that are just waiting, and they would just give anything at this point to get down to the 4 and the 5.
Yeah. The 4 and 5, 2 and 3, that was an artificial low, right? And so it's sort of like, do we really want to even go back there? Do we want to stabilize into a more normal, healthy free market environment, stabilize? And, so I think that probably an expectation for just a normal market would be a 6 or a 7, which is about where we're at right now. And I do think it's just such a complicated market situation coming from where we came to where we're at now that to get it low, it just seems unbelievable and unrealistic, honestly. And so focusing on ways to free up cash flow each month out of your budget seems like a good idea. And if you have extra money, now you can either pay for stuff and avoid more debt, or maybe you can eliminate, front load and pay down a lot of, the mortgage now or whatever and be debt free earlier, So it just seems like a real opportunity as long as you're careful with your strategy.
I would mention that also the totality of everything altogether on if rates are low, what did that do? And there was another effect, which home values increase. There's more people in the population.
That's true.
Right? I mean, with the low rates, more people suddenly were in the buyer pool.
That's true.
So
true.
there is a little bit of that too.
Yeah.
And so, I think finding that happy
Driving prices
medium.
up, yeah.
Yep, I'm finding that happy medium is likely where we're going to land.
Awesome. Well, thanks for sharing that with me. Do you have any other comments or any other ideas that you think you want to push out there right now on the mortgage side of the customers?
Honestly, the thing I would say is there's still opportunity.
Awesome.
We're still doing it. We're still here.
Yeah.
We are still answering calls. We are still formulating scenarios and ways that can improve a person's financial life using their mortgage as a tool.
Yeah. You're still finding success helping people.
Absolutely.
With it today.
Yes.
Awesome.
In fact, I got to go do something else.
All right.
Hey, man, thanks so much.
chatting with you.
Yeah,
Hey, buddy.
appreciate it.